Hey everybody, it's Dave Mattis with Remax of Reading, and I'm here today with one of my quick hit videos, but just bear with me. This won't be a very short one, probably about 5 minutes, because I have a lot to talk about. And what I wanted to mention today was the 5 things that buyers need to know in this market, and they might not be being told by their realtor. So number one, if you're pre-approved for 300, let's say, for example, search lower. Homes nationally right now are just finally reached the point where they're all selling, over asking price on average. Here in Berks County, of the homes that have sold so far through today, 1,083 homes, our ratio of original price to final sales price is 98.6. So that's still really, really significant. So the point here is if you're approved for 300, search 275. That way you have a little bit of a cushion to go up with your offer, because many, many times here in Berks, homes are going for more than asking. So number two, make your first offer your best. And I have a couple of really great suggestions here, but the thing I want to make sure that you're aware of is that sellers don't always accept the highest offer. There are other reasons that they may accept your offer. So here are a couple things that you might want to consider. This one is a bit taboo, but waiving inspections. A lot of people are doing it. Do we sit here and say we recommend it? Of course not, but it is definitely something to consider if you're comfortable with that. There are even inspection companies out there that are offering inspections or to go along with you on a showing to actually sort of do a pre-inspection as well. So let me know if you're interested in that service. Make your escrow deposit non-refundable. It's pretty risky, but it's pretty gutsy, but it could make the difference. In Pennsylvania, we have a 2% transfer tax in most areas. Reading has 5, Philadelphia is a little higher, but that is split between buyer and seller. So what I'm suggesting here is to pay both sides of the transfer tax. So take care of that for the seller. Puts a little bit more money in their pocket, makes your offer a little bit stronger. Appraisals have been an issue. So if you go really high on a price and it doesn't appraise, if you have the means, you could offer to make up the difference from the purchase price to the appraisal in cash at closing. That is also something that really makes your offer very, very powerful. And last but not least, I wanted to mention this one. If you are able to, one of the strongest things that I recommend is if you can buy before you sell. And again, a lot of people don't want to take that risk, and I totally understand it. But if you have the means, it could make your life so much easier. Rather than having to make your new sale contingent upon your old sale. So that's something to explore, and you can certainly do that with eyes wide open, because we have knowledge on how to put that together for you. And of course, we have great lenders that can help with that as well. So number three, and 3 and 4 sort of tied together, but number 3 is be aware that you may lose at least one house, and you may lose more than one house. So it's very frustrating. You have to kind of make sure that you're in the game. And it is very stressful, but I just want you to be aware of it. And if you're aware of it ahead of time, maybe it won't hurt so much. And then last but not, tying together with that, number 4 is you may have to make 4 or 5 offers on homes to finally get one that you love. And number 5, this is one where I kind of elaborate a little bit here and sort of try to answer the question, is this a terrible market? And what I'm getting at is that interest rates are still absolutely amazing. So I ran a couple scenarios for you here that I wanted to just kind of let you know, some reasons why now is a tremendous time to buy a home if you're a buyer. So let's say you have a $275,000 loan at 3.25% interest for a 30-year loan. That's $1,197 a month. Let's say you offer over asking. You offer 300, so that payment goes up to 1,306. Are you really going to lose your dream home for $109 a month? Probably not. Now, where it starts to feel a little bit more, you might start to feel a little bit more pain is if interest rates go up. Fast forward 6 months, prices have gone up to 325. Interest rate has now gone up to 3.75, and now the payment is $1,505, $308 more per month. That sort of reaches a point where it may not make sense. So I just wanted to let you know that based on that, I feel that it's a tremendous time to buy a house if you're a buyer. And then last but not least, with that scenario, I wanted to kind of compare the interest. So for the first payment where you got the house for $300,000, or should I say you got it for $275 at 3.25% interest, it's $745 in interest per month. And if prices went up and interest rates went up, the payment was $1,505, and that's $1,016 in interest per month, And if you total that up over the life of the loan for 360 payments, it's actually a difference of $97,560 in interest. And a lot of people may say, well, we don't stay in our houses that long. But I did a video recently where the average is coming up on 14 and 15 years. So we are staying in our homes longer. So buying a house now with the interest rates that they are, as hard as the market is still a good thing to do, in my opinion. So I hope that makes some sense to you. If you have any questions about any of these details, we've been training the team up on that, getting them to use those tactics when they are making offers for our buyers, and we would love to help you. Thank you so much.